Hello friends and welcome to Northsella Wealth. Today in this video we will be understanding a basic difference between two different type of top-up plan. One is a regular top-up plan, another one is a super top-up plan. In our previous video we have discussed super top-up plan in details of different companies like Star Health, HDFC and Tata. Today in this video we are understanding top-up plan, but there are two different types of top-up plan. Before starting our video, let me introduce myself. I am Mahindra Rao. I am a chartered wealth manager and a qualified personal finance professional, and I have been associated with insurance and investment industry for a past decade now. So let's start our presentation for today. A difference between two top-up plan. One is regular and the other one is super top-up. So top up versus super top up. Which plan is right for you and why it matters? So whenever you opt for a top up plan, you have to have a basic idea what are the two different type of top up plan. So in this video, I am explaining that basic difference. Which plan is right for you and why it matters. So basically a regular top up plan will cover your per claim basis, but a super top up plan will cover your aggregate basis. So what is happening here is we are not increasing our premium, but we are strategizing our insurance coverage by opting for a top-up coverage. So first basic thing to understand is why a top-up insurance. The reason are pretty simple because the medical inflation per year is rising and the whole ecosystem costs are rising. It is not just medical bills which are rising. It is a hospital surgery, it is diagnostic, lab test, medical bills, medical premiums, medical premiums, health insurance premium. These are also rising by 10 to 12% year on year basis. So a super top up plan will give you a massive extra coverage at a very small additional premium. But which is best for you, a regular top up plan or a super top up plan? Let's find out. Now, by definition, if you see a top up plan covers medical expenses above your deductible, but only when a single hospital bill exceeds the deductible amount. It is an event-based protection and it triggers only on single large claim. Now let's find out how it works. There is a claim of 3 lakh rupees and you have a deductible of 5 lakh rupees. Deductible is something whenever you opt for a top-up plan, and if there is a bill which is below your deductible, that bill is not claimed, right? Which we are seeing in this example. There is a claim of 3 lakh. This is less than the deductible. So the bill is not passed, right? The insurance company will straight away reject it. And then there is another bill of 4 lakhs for next treatment or another treatment. The same bill is again less than the 5 lakh deductible. That bill is also not getting covered. Now, if you get a bill of more than 5 lakh, which is 7 lakh in this example, a claim C, it is exceeding 5 lakh, which is more than your deductible. So 2 lakhs get paid from your top up plan, which is your regular top up plan, right? So the key rule here is deductible applies per claim. Each hospitalization is treated independently and it is not clubbed together. If you go to a hospital, there is a claim of 3 lakhs. This will not be covered in a regular top up policy. Reason is that will be covered in your base policy. In second claim, there is a claim of 4 lakhs. Then again, it will not be covered in the base policy because the amount is less than 4 lakhs, right? Now let's find out what is covered in and how much is covered in the super top up policy. So by definition, if you see a super top up plan, it covers medical expenses above your deductible, but it counts all the hospitalization in your particular policy year and not just one single bill. In the previous example, we have seen it will cover only one single bill, but here you get an aggregation of all the bills. Now there is a claim of 3 lakhs. It is less than 5 lakhs, so it is not covered under this. Now there is a second claim of 4 lakhs. Now the aggregate amount is 7 lakhs and your deductible is 5 lakhs. So 7 minus 5 is 2 lakhs. 2 lakhs will get paid to you under a super top up policy. And if there is another claim of 7 lakh, that will again be covered under super top up policy, depending on how much super top up cover you have taken. So the key rule here is deductible applies only once per policy year, and then all the claims are added up and aggregate total matters here. So this plan is very suitable and best for families and people who have frequent claims or they have lifestyle diseases, right? The critical difference, if we compare this side by side, in the same example I have taken, the scenario is deductible is 5 lakhs, there is a claim of 3 lakhs, and there is again another claim of 4 lakhs. In both the scenario, a regular top up plan and a super top up plan. In regular top up plan, claim is not covered because the amount is less than 5 lakh. In second claim, 4 lakh is again not covered because the amount is again less than 5 lakhs. Then there is a total bill of 7 lakh. The total bill of 7 lakh is not covered under regular top up plan, and you end up paying everything, right? You must be having a base policy. Everything will be covered under the base policy and not from a regular top up plan. Now there is a scenario wherein you have a super top up plan. The deductible again is 5 lakhs. Now there is a first claim of 3 lakhs that is not covered because it is less than 5 lakhs of your deductibles. Then there is another claim of 4 lakhs. Now the total claim in that particular year is 7 lakhs. And how much deductible you have? 5 lakhs. So 7 minus 5 is 2 lakhs. 2 lakhs is covered. Now you have to pay 5 lakh only from your base policy and not from your pocket. This is just for understanding. I have mentioned that there will be a total out of pocket. You must have a base policy and then you go for a super top up plan. Directly, we cannot jump on a super top up policy. We have explained it in our previous videos as well. Now, if we see the feature by feature comparison, deductible in a regular top up plan is a single claim basis. In super top up, it is aggregate basis. Trigger point, it is only claimed as per one large hospitalization. And in super top up, it is total bills in a year. Multiple small claims are not covered in a regular top up plan. All counted together, it can be claimed only after the deductible is exhausted. Deductible paid every single claim only once a year. Family suitability, it is limited because if you have a multiple claim in a single family, it will not be covered. If you have four different claims for four different family members, regular top up plan will be of no help. But in a family, if you have a super top up plan, then it is highly suitable because everything will be clubbed together and the claim will be settled. Frequent claims, high out of pocket. Again, if you are having a frequent claims in that particular year and the amount is less than your deductible, it will not be passed. And whereas in a super top up plan, it is well protected. Premium cost, it is slightly lower. It will be marginally higher because it will be better value for money. Out of pocket risk in a regular top up plan is high and in a super top up plan it is low. So these are basically feature by feature comparison. Everything that you need to decide, I have provided it on a glance. Now, if we see the power example, same two claims, same deductible, completely different results. For regular top up plan, now we are understanding the setup wherein a base policy is of 5 lakh, top up and a super top up policy of 10 lakhs. So total coverage is of 15 lakhs with a deductible of 5 lakhs in a super top up policy. Now there are two hospitalization in 1 year. First is a dengue, which is of 3 lakh. Second, there is a claim of a surgery, which is 4 lakh. Now, when we opt for a regular top up plan, how it functions? 3 lakh is not covered because the amount is less than the deductible. It will be covered from the base policy and not from the super top up policy, right? Again, there is a claim of 4 lakh that will again be claimed from your base policy and not from your super top up policy. So there is a total bill of 7 lakh which will be paid from your regular top up policy. Now, if you have a super top up policy, you have a 3 lakh claim which will be settled from your base policy. And again, then there is a 4 lakh claim. If you have a 5 lakh policy, that but you have a claim of 7 lakh. 5 lakh will be claimed from your base policy and the remaining 2 lakh will be covered under your super top up policy. But if you would have compared this with a regular top up policy, it would not have been covered. But here your complete 7 lakhs are getting settled. And here only 5 lakh is getting settled through your base policy and regular top up policy is coming of no use, right? So when to choose which plan? You can still opt for a regular top up plan if you are young, between an age of 25 to 35, because the claim frequency will be limited. If you are single, there is no family dependent to cover. There is a very rare hospitalization wherein there is no pre-existing condition and the premium will be marginally low. If you are tight on budget, you can opt for regular top up plan. But it is not recommended any which ways. Now, the reason for choosing a super top up plan is very simple because it gives a coverage of family floater wherein you are covering your spouse, children, parents-in-laws, everyone gets included. And if you have a lifestyle or a chronic condition wherein your diabetes, BP, heart, and there are recurring claims. Now, if you are having a member who are covered under this policy, older members generally have more frequency to get ill and have a hospitalization expenses. Also, it helps you to protect your wealth because too much of hospitalization will erode your wealth because your money will be spent on medical bills only. So, this is generally recommended most of the advisors today. Most of the private companies are offering super top up plan. Most of the PSUs still offer regular top up plan. Some companies in private are still offering a regular top up plan, but you always opt for a super top up plan. Always ask and discuss with your advisor to offer you a super top up plan rather than a regular top up plan. So, a pro tip, the ideal health insurance strategy, how should your health insurance strategy should be? You should It should not increase your premium and it should only increase your insurance coverage. Ideal structure I have taken wherein you have a base policy as well as a super top up policy. The base policy becomes your deductible, right? So you have a base policy of 5 lakhs and a super top up policy of 25 lakhs. So you have a cumulative protection of 25 lakhs. Now, if you have a base policy of 10 lakhs, opt for a 50 lakh ka super turbo policy. So you have a cumulative protection of 60 lakhs, right? And keep, if you are buying a super turbo policy of 50 lakhs, keep base policy of 10 lakhs as your deductible. If you are having a super turbo plan of 20 lakhs, keep your base policy of 5 lakhs as your deductible. So always set deductible as your base sum insured. Choose 2 to 3 year policy for a discount so that you get a better discount on premium that you are paying. And always review your coverage after 2 or maximum 3 years. Always include your family in a part of that policy because you will be having a reasonable premium compared to a standalone policies for your family members. So the strategy is very simple. Don't increase your premium, increase your strategy, which will increase your insurance cover. So here we at North Stella Wealth are on a mission to provide financial wellness for more than 1 million families. What we do is we assess your base policy and identify whether a super top up plan is available to fit you. We calculate the ideal deductible that eliminates out of pocket exposure. We compare plans that are available in the market from different private insurers, and then we design a complete health insurance policy or a complete health insurance portfolio which will cover your base policy, your super top up policy, and any additional add-on covers which you require, like a global coverage, like an emergency ambulance, like a bariatric surgery, anything which are available as an optional cover for you. So get your health insurance portfolio designed right for you. Contact us today. So guys, if you have liked our video, do subscribe to our channel and do share it with your friends and families so that they can also take note of all the educational videos that we are bringing it for you. Let's meet in our next video where we'll be discussing ICICI Lombard Super Top Up Plan in details and understand the features and benefit. That's it from my side now. Signing off, Mahendra Rao. Until we meet again. Bye bye.